Hey, it's Darren with Arbitrage Trade. It's time for Deep Dive with Daniel. And this week, his blog was about a modern gold rush. What's driving central banks to gold? We brought this up a little bit in some of our After the Bells, but not everybody that sees this show sees the After the Bell, so it can't hurt. There's got to be a reason why central bankers are just piling up on the gold, and gold is hitting all-time highs, et cetera, et cetera. So that made you do a little deep dive for us. So kind of set the tone here for us on why the heck gold is at all-time highs.
Yeah, so as someone who's been following the markets for a while, this kind of crept out of nowhere, right? People
It
really
did.
weren't paying attention to it. And then all of a sudden, maybe around $2,500 an ounce, everyone's like, oh man, gold's ripping. And then it's at 26, now it's at 27. And it's, I believe, obviously depending on the day, it's outperformed the stock market this year at 33% return, right?
Yep. Yep.
Assuming the year were to end right now, right? We still have an election cycle to go through, but
Yes.
gold is actually one of those potential hedges against this election cycle, which could be in part why it's rising. But the big reason, or at least the news reason, is that now central banks hold 12.1% of the world's gold reserves to diversify their balance sheets more or less away from US dollars.
Right, right. And the BRICS movement had something to do with that too, I believe, right? I mean, that kind of seemed to me that's when it all started, was when they started meeting to find a way around the dollar over in the Far East.
Yeah, I think this has actually been a trend since I want to say it's like 2018 or 19. I remember for a long time, China had been compiling really large gold reserves
Hmm.
um, in like pretty large quantity. I know maybe when Russia invaded Ukraine and they were kicked off SWIFT, that they had potentially we're going to do some kind of currency between them and China that was backed by gold. I know BRICS is talking about it now. So there is a lot at play to kind of create this kind of new potential currency or reserve you know uh, asset that a lot of these different countries that don't necessarily want to be held by the US dollar, the petrodollar maybe more so, are looking at to start using to kind of hedge against maybe where the world might be moving and how they want to position themselves within it.
Yeah, it screams like a lot of the world knows recession is coming or has already came, and it seems like that's what's being used in place. Because I know a lot of these guys are asking for physical delivery, not just a little contract. They want the actual good stuff brought to them now, and to stockpile it that way. So that to me means a lot of other crazy things could happen too. Which is kind of scary as we move right into Halloween. It is Halloween Eve as we do this show. Um, it just means to me, and by the way, shorts. I mean, people are shorted the heck out of gold and silver, and at some point that has to break too, right? Or is that what's causing this to go push up or not? Or am I wrong there? Because I know it's been shorted a lot. Just like Citadel likes to short our treasuries, it's a lot like I know that the gold got shorted a lot, and some markets got in trouble for all of that too. Um, so
Yeah,
go ahead, just tell me all the things that are affecting this, not just hey, these guys want to buy, these central bank wants to buy.
historically, gold and silver have actually been kind of cornered markets before. The and to be fair, it has actually been bigger players that have gotten in trouble, right? Where maybe on the stock side you don't see that as much. I'm pretty sure
Yep.
J.P. Morgan's been in trouble for spoofing in gold
No,
not too long ago, or maybe it was silver. I can't remember.
it was
Um,
silver.
so yeah, of course you would know.
But if you look back
You're
through all of the
yeah.
Yeah.
disciplinary actions, you'll
I
find
just have to
all the
say that.
medals. Yeah, go ahead.
So
Go, go.
yeah, famously, silver had was I forget when it was, maybe the 70s, was cornered by like literally two brothers that were traders, and they like made it skyrocket like overnight, more or
Yep.
less. But yeah, it when things rise, people want to short. There is speculation of, I believe it's GLD is the largest like kind of gold ETF that's traded, and how a lot of gold is held for institutions. And I think you've brought up before that a lot of times these people go to kind of claim their gold, right? Because you're supposed to be able to get physical delivery of that gold, right? It's
Right.
not
Right.
it's not a fractional reserve thing, to my knowledge. That
Depending on how you
kind of
buy it. Yeah. 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 Of course.
yeah, it's you show up and what, it's either fake or it's not there.
A lot of times. A lot of
Yep.
times. It's crazy, and it could be so depth because of how long this has gone on. I mean, it's like, wow, who's even keeping records from back when all this started? I mean, it's absolutely crazy what could happen there. But just again, to me, it just screams we're in a lot of trouble as a world. Not to be that guy. Yeah, I'm always that guy.
I mean, in my opinion, it's a bit of I don't know. It is important, but it's also a bit of a nothing burger, right? Because I think at the end of the day, when all of these, let's say these countries move off the dollar, they create some new currency. They're just going to do exactly what the US did with Bretton Woods. They're going to move off the gold standard, right? It's going to be monopoly money. Um,
Yep,
and
that's
I,
all
I
it is.
do think, as much as you'll probably disagree, probably something backed by Bitcoin is a bit more valuable, at least in this day and age. I think before you kind of had to have like, gold was this thing. I'm like, I think to a lot of, at least the newer generation now, it's like, oh, it's just kind of a shiny metal that we actually need for computers, right? Like, where at least, with crypto, you could say there's some utility to it. Where we're not about to start going and trading like gold coins again.
Yeah, I just don't know we're going to be buying things with Bitcoin per se. A
Well,
lot of
no,
changes have to
but
happen.
how long has it been since we bought things with gold, right? It's
True,
just backed. It's
true.
just backed by Bitcoin, and I do think the only difference, and this is not the point of this article, so I won't get into the details,
Sure,
is
sure,
that
sure. Yeah.
like with Ethereum, for example, right? Obviously, it's not Bitcoin, but Bitcoin can do this. There is the smart contracts. There is tracking, right? There
Yeah.
is like an entire layer of infrastructure that is used within it that does, I think, make it provide some kind of actual commodity value, where I don't think gold stands that test as much anymore.
Okay. One of the last
It's
things
about
I
as
wanted to
real
ask.
as fake diamonds.
Oh, there you go. Just depends on who's mining them, whether it's legal or not.
Or made
Blood,
in a
blood
lab.
diamonds. Yeah. Um, so, and I've always wanted to ask someone in the business or was in the business, which is better? Is it gold ETFs or gold miners, um, or physical gold? If you had to pick between those three, I mean, considering where the price is right now too, or gold ETFs. So which one would you go for? Just play money. Which one would you go for?
If you're gonna play, so,
Yeah, if you
so
wanted, let's say I want to get in gold today, would it be ETF? Would it be physical gold? Would it be the uh, see, I already, it was what I just said.
the
I mean,
miners.
there's like four
Yeah,
different
yeah.
ways to get into gold. Miners.
So I think if you're like actually trying to buy and hold, and you're like really worried about some kind of world meltdown thing, right? Obviously, you like hold gold, but it's not like you're gonna go to like Publix and like give them a gold bar to pay for your groceries, right? So I think it's a
Clunk.
bit silly.
Yeah.
But so it's like, yeah, you buy gold, right? If you want easy access, you do the ETF, but then you obviously risk it. Maybe
Yeah.
maybe
Yeah.
not being there. And then, but two, if you actually want to play, gold, you want to trade it. The research shows that you want the gold miners that have more debt, because it's a leveraged return, right? So
Hmm.
if you go to if you're playing the miner and you have a miner that has very little debt, it's going to trade much more at parity. Let's just say 1 to 1, right? But if you find a gold miner that has a lot more debt, right? So you're essentially trading them on leverage. Your parity is 4 to 1.
Okay.
But that being said, it's having a beta of 4. you trade both ways with that same
Right.
thing, right? So if gold goes up 1 times, you go up 4, but if gold goes down 1 times, you go down 4, right? So you are
Right.
essentially playing with leverage, so you better time it right.
Gotcha. Gotcha. All right. Cool. Well, I appreciate you bringing this this week, and hopefully we don't run into a Mad Max situation where the only thing we're trading around is gold doubloons or whatever, little gold coins to buy toilet paper.
I mean, the
You
only thing
never know.
that gold's going to be good for is like throwing at people. Like,
Well, throw it my way, please. We'll catch and put it in a bag.
I think at that point in the world, the only thing that's going to matter is guns and butter.
I think you're right. Give me some ammo and a gun. All right, what a way to finish this one. Thanks for bringing that in to us there, Daniel. And the next time we do this, as I said in the other thing we did today, the After the Bell segment, we're probably still counting votes, and we still don't know who the leader of the free world will be. So we might have to have an interesting subject next week, depending on what happens over the next 4 or 5 days there, Daniel. All right, talk to you later, Daniel. Have a good one.
Bye, Darren.
Bye.